With the final month of 2024 upon us, I've been researching some under the radar stocks, and in this video I'll share some of those with you. Now, I don't own any of these stocks yet because I am fully invested, but I am looking to shift some of my profits to some of these stocks if given the chance. Historically, the month of December is one of the best performing months of the year when it comes to stock market performance. According to this chart, after a year in which the S&P 500 has already gone up 20%, the chance that it'll keep going up in December is extremely high. In fact, the last 5 times this happened, December was positive 100% of the time. As to what sectors perform the strongest, it looks like small to mid caps are the sweet spot, which gives a market cap range of between 1 to just under $20 billion. And all of the stocks I'll be mentioning in this video fall within this range. As always, this isn't financial advice and it's for entertainment purposes only. Alright, let's move on to the first stock, and it is called Doximity, ticker symbol DOCS. Doximity is a digital platform and networking site for doctors. It offers tools like telehealth, scheduling, messaging, and collaboration features to help doctors and patients. The company makes its revenue through subscription-based services paid by hospitals and pharmaceutical companies. What's interesting about Doximity is that it has now started incorporating AI features into its tools, and this may be behind its recently accelerating revenue growth. It's also a profitable company with a net income margin of 31% and an ROE of just under 20%. Furthermore, Doximity is generating strong free cash flow and has recently started a $500 million buyback program, which is a bullish sign. Now, when it comes to the chart, after IPOing in 2021, it got crushed during the 2022 bear market, but it looks like it has since bottomed out. As long as the price remains above these 2 weekly EMAs, I'm inclined to stay bullish. On to the next stock, which is called Toast, ticker symbol TOST. Toast is a cloud-based point of sales or POS provider that is sort of similar to Square's, but it focuses exclusively on the food and beverage sector. And it's more than just a point of sale system. It can also handle digital ordering, delivery management, marketing, and staff management. It makes its money through subscription services and app and hardware sales. The company is currently experiencing high growth, with revenue in the last quarter growing by 26% year over year to $1.3 billion. It's also recently turned GAAP profitable, earning $5 million in Q2 and $56 million last quarter. Like Doximity, Toast has high insider ownership at around 28%. This means management's interests are aligned with those of shareholders. The company is currently trying to expand to international markets and is rolling out new AI features to boost its marketing capabilities. When it comes to the chart, it looks quite similar to Doximity. It IPO'd in 2021, after which it fell precipitously, then based for a few years before recently breaking out on good volume. If Toast can keep up the current earnings momentum, I don't see why it can't keep going up in price. If you want to see more stocks like this, I've just relaunched my membership page where I post my top 30 stocks every month. I've also added a Discord server, and members will get access to that and more for a low monthly fee. Click on the link in the description below for more info. Okay, next on the list is Tempus AI, ticker symbol TEM. This one is a biotech company that is building an AI platform to help pharmaceutical companies develop new drugs. The company says it specializes in AI-driven precision medicine. It provides services like cancer screening based on a patient's genes, access to a database of clinical information that drug developers mine for insights, and applications to help these pharmaceutical companies run clinical trials. There's a few companies that are in this field, but Tempus AI appears to be the leader. This is because the company actually earns sizable revenues, with Q3 revenue growing at 33% year over year to over $180 million. The fastest growing part of this business is its clinical data services segment, which earns revenue by selling access to clinical data to pharmaceutical companies. This is promising because good data in healthcare is hard to come by, and Tempus looks like it has a bit of a moat in this area. When it comes to the chart, Tempus IPO'd only a few months ago, so there isn't a lot of price data here, but it looks like it is trying to go higher at the moment, and as long as the price holds the 10-week EMA, which is the blue line here, it's more likely to head higher than lower. However, one thing to keep in mind is that there is huge insider ownership here at over 68% of the share float, and once the IPO lockup period expires sometime in December, there could be a wave of selling by insiders, so just watch out for that. Now, the fourth stock on my list is called Amer Sports, ticker symbol AS. Now, this is a holding company that owns a couple of premium apparel brands focusing on outdoor sports. They include Arc'teryx, which is an apparel brand that looks more like an expensive version of the North Face, Salomon, which is a premier footwear brand, Wilson, which is the famous sports equipment manufacturer, and Peak Performance and Atomic, which are brands focusing on snow sports. Now, to be honest, the only brand out of these that I've heard of is Wilson, but it looks like there's a lot of demand for the company's other brands, with its products being sold in more than 100 countries. Arc'teryx appears to be their best performing brand with the highest margins, and if you look at the prices of these items, I'm not surprised. It looks like Louis Vuitton prices, but for outdoor clothing. But premium brands like this are driving strong growth in revenue for the company, with double-digit percentage growth in the last few quarters. The company is not GAAP profitable at this stage, but I'm not too concerned as long as the revenue continues to grow strongly. One interesting thing to note about this company is that it has huge insider ownership at 87%. Upon further investigation, it looks like the Chinese sporting giant Amer Sports bought the Finnish company in 2019 and just recently relisted it. The Chinese company still seems to hold just under 50% of Amer Sports, and interestingly, other significant shareholders include Chip Wilson, the founder of Lululemon, and Tencent of all companies. Moving on to the chart, this is a recent IPO that floated earlier this year, and after bottoming out in August, the stock has nearly tripled in value, with the rally accelerating in recent weeks. This looks like a typical post-IPO breakout, and the future is bright for the stock. My last stock is a company called Klaviyo, ticker symbol KVYO. Klaviyo is an email and SMS marketing business. Its customers are mainly small to medium-sized businesses, and it's used by quite a number of social media influencers and e-commerce businesses to drive engagement with their customers. Now, the company itself is a high-growth business that is free cash flow positive. In the last quarter, it grew revenue by 34% year over year to $235 million. Gross margins are expanding, and I wouldn't be surprised if the company becomes GAAP profitable over the next few quarters. Taking a look at the chart, it sort of looks like a couple of the other ones mentioned in this video, with the stock recently breaking out of an IPO base. The big red candle here is a bit worrying, but as long as the price continues to stay above the 10-week EMA, which is the blue line here, the rally should continue. Alright, there you have it. That's 5 stocks that I'm keeping an eye on for December 2024. Do you own any of these stocks? If you do, let me know in the comments below. What do you think of them? And please don't forget to hit the like and subscribe button for more videos like this. Thanks for watching, and see you next time.